All right. Actually, can I start small picture and then go to 30,000 square feet, 30,000 feet? So as a portfolio manager, I have a twisted relationship with corrections and pullbacks, which is I actually like them. And I know that that might sound callous, and I know that people are hurting and that we're losing money. But corrections, pullbacks tend to be finite, right? Your investment horizon should be long term. So what these markets do for someone like me is they create opportunity. And right now, my watch list is more robust and more realistic in terms of things that I might be able to buy than it has been in a very long time. So I actually have a kind of spring in my step right now. Taking the bigger picture view, I don't think my perspective on what's going on right now has changed really since September, which has been I've expected the first half of this year, the end of last year, I was wrong on the end of last year, but the first half of this year, to be messy. We have hard things going on. We have QE ending, we have tightening starting, we have the Fed probably rolling off their balance sheet, we have geopolitical tensions that are pretty rough right now. And interestingly, when I looked back at our year-end letter and we said to our clients, like, here are things that we're worrying about for next year, Russia, Ukraine wasn't even in there. And that was a good reminder for me that whatever the trigger of the next correction and pullback is, you frequently don't know. The things that you do know are not the ones that actually end up getting you. So I'm looking at this and I'm saying, hey, you know what? For whatever reasons that's happening, it's pretty healthy right now. What we're seeing is we're seeing valuations start to reconcile, right? We had things that were at 80 times that didn't make sense. We had things that were at 10 times that didn't make sense. Both of those are coming to center. So I'm feeling reasonably good about what's going on. It seems healthy. It seems methodical. It seems rational. It's not great. People don't like losing money, but it's a healthy, I don't know, sequence that we're going through.
Well, and John and Jerry, and I mean, first off, you know, it's no one's losing money yet if they haven't sold. On paper, you can look at it and be like, oh my God, my index is down or whatever it is. But if you haven't sold, right? And I know that there's an old saying in the commodity pits of Chicago where you cut your teeth. I think it was Everett Klipp was the guy who said a small loss is a good loss, meaning you didn't take a big loss and maybe you learned how to make money. We got millions of new investors watching CNBC, going on Market Rebellion, right? That are learning, oh my gosh, stocks can go down. To Jenny's point, this is not all unhealthy.
Right. It's not all unhealthy, Brian, but it's certainly uncomfortable. To Jenny's point, I know you made that point, Jenny, and you're absolutely right. None of us want to make light of the idea that people are hurting, that they're looking at their account every day and they're just saying, oh my God, let's just stop the pain, shall we? Like hitting yourself in the head with a hammer.
But don't do that, right? Don't do that.
It feels so good when you stop, Brian. What's going to stop it? When I look around, you know, the fact that we're into this correction territory that you've mentioned, and CNBC has been doing a good job staying on top of that, that's truly one of the things that we're looking for, is for us to get into that territory and then see if we can bounce back out of it. Unfortunately, with the rhetoric as well as the intelligence briefings that we're getting almost on an hourly basis, it's really difficult for the market to gather itself here, Brian, when you think that in all likelihood we will see more of the same going forward for the next days and perhaps weeks, hopefully not months. When I looked out at the VIX constellation and I look out all the way to July, we're at 27. To give the viewers a metric against that, back in November, before Omicron breakout was basically the end of November, and you know, another new strain, oh my, we were more like 16. So getting up to 27 and going all the way out to July tells us people are preparing for a long slog of higher volatility. Now, again, I think that will create opportunities. It is already. And you know, Brian, that in all likelihood, energy is going to be one of those places where you just want to stick with it, because nothing that I'm seeing right now implies that energy is going anywhere but higher.